So if you want to learn macroeconomics in a fun and easy way, then George Gammon can explain it to you in 3 simple, fast steps. So this is Brian Lewis with MMT Investing, and things just changed. So George Gammon's YouTube channels, he's always explaining things in 3 steps. And he does whiteboard videos and explains macro concepts and talks about investment ideas and how to allocate portfolios. And he interviews a bunch of different macro famous people in investing and in macro field. It's a really cool channel. It's my favorite channel. And he has I guess, just the basic idea that you should buy assets cheap at like an inflation-adjusted mean reversion trend line, and then from there, the probabilities are that it will go up and it will be a good investment. And that is awesome if you are at a mean reverted bottom. So he does 10% of his portfolio to gold, which he says is insurance. He does 10% of his portfolio to speculation, which is like doing stock market trading. And then he does 80% of his portfolio to what he calls actual investments, which is things that pay you to own them, such as real estate. So that's not my philosophy right now. So I'm a cyclical investor. So I look at the credit contraction cycles and I draw kind of mathematical models of the credit contraction cycles and try to figure out what the stock market is doing inside of those cycles and like what is cheap or expensive. It's hard. There's just nothing cheap right now. I mean, we just got up to the top of the everything bubble. There's nothing cheap. So, I mean, that George's philosophy and strategy is really, really good if you are at a bottom, and then it's like a long-term bull market strategy to go from a bottom to wherever it goes in a bull market. But if you're at the top of a bubble, I don't know how you do that, because what do you buy? So for instance, like gold as insurance, like I don't exactly view gold as insurance. I view it as a speculative monetary asset. And you can look at silver and Bitcoin in a similar way, or treasuries in a similar way. What I've been doing is just seeing how they behave in this stock market crash and this credit down cycle. And basically, Bitcoin and silver have been crashing with the market. So they're not acting like monetary assets. And gold has been pulling down with the market, and it's been going back up to even or even up above even. So gold is behaving like a monetary asset, but I don't really view it as insurance. I think it's money. I think it's a different kind of money. So it is insurance in that kind of sense, that it's behaving like money right now. And it's a different kind of money you can use to diversify your political risk. Like you could hold a gold fund outside of your home country, or you could vault physical gold outside of your home country, or you could have physical gold at your house, which is a way to not only have dollars as your only type of money. It's a different type of money. So yeah, I do view it as insurance, but it's very speculative. It's a political monetary asset. Governments will collect all the gold up when they're reorganizing the monetary system. They've done it a lot of times. Governments all over the world do that if they're going to use gold actually in a new monetary system. And we're looking at changes in the monetary system. If gold becomes involved in that new system, it becomes pretty risky to be holding gold. Like they'll just take your gold from you, and then they'll use it for the monetary system, and they'll just give you worthless dollars, and you'll lose your money. So it's tricky. Like you could try to vault it out of the country and not keep yourself out of that situation. But right now, I'm viewing gold as money. Like it is holding its value through the crash, and it's like, I think gold is sort of like cash with upside right now. So it is I think it's good, but not exactly insurance. And then for the value investing, like 80% of George's portfolio, like what can you possibly buy right now? We're at the top of the everything bubble. There's nothing of value to buy. So I almost have like an inverse value investing principle at the moment, because coming down off the top of like the historical biggest, like the biggest bubble in the history of the world. That's like a inflation adjusted mean reverted top to it's it's the opposite. And you can come and like short investments on the way down. And so I mean that my portfolio right now is like 80% monetary assets and 20% speculative short. This week, for like another week and a half or 2 weeks, I'm looking for the next reversal in the cycle. And then I'll be maybe 80% gold for 2 weeks or something like that. And then another month to the next reversal point. Um, and then the whole market conditions change, and which assets are good change with the credit cycles. Completely different cycles. You can have expansions, credit expansions or contractions. You can have positive growth or negative growth, and it changes which assets are good. So in order for me to have a long-term value investing outlook like George has, you have to actually find a bottom in the credit contraction cycle relative to that asset that you want to buy, which is complicated. So that's hard to find, and there's nothing like that this week. I know that. So that's kind of the general idea of my channel. I do like mathematical models of the stock market based on the credit contraction cycles and do technical analysis. So my channel is very much into the speculative side of things, and then I do these kind of macro videos like this. And yeah, so George's channel was a big inspiration for me to start this channel, because his channel started getting popular talking about macro. So I'm like, okay, people actually are looking at macroeconomics. That's awesome. So I decided to start this channel, and I thought maybe I could be the speculative yin to George's macro yang.